Have you ever wondered if an idea, born from the shadows of a global crisis, could one day challenge an asset that has defined wealth for millennia? What if a string of code, invisible to the naked eye, could embody the same enduring spirit as a lump of shimmering tangible gold? This is not a tale of fantasy. It is the story of Bitcoin, a digital pioneer on its arduous journey to be crowned the gold of a new generation. It's a story about challenging the very definition of value. It's about a silent revolution that began with a whisper and is now echoing through the halls of finance. It's a journey of overcoming immense skepticism, volatile storms, and the deep-seated traditions of an old world to carve out a new legacy. The comparison between Bitcoin and gold is not merely a clever marketing slogan. It's a profound recognition of shared principles, a digital echo of an ancient truth. When investors look at Bitcoin, they see more than just a volatile asset on a chart. They see the ghost of gold's own story, reimagined for a world that lives online. The journey began in the ashes of the 2008 financial collapse, a time when trust in traditional institutions was shattered. From this rubble, an anonymous creator, or group of creators, known as Satoshi Nakamoto, gifted the world a radical idea: a decentralized digital currency, free from the control of any government or central bank. This fundamental principle of sovereign independence is the very bedrock of Bitcoin's comparison to gold. For thousands of years, gold has been the ultimate refuge, a physical anchor in times of economic turmoil. Precisely because no king or government could simply print more of it, Bitcoin was designed to inherit this powerful trait, to be a digital fortress against the very same forces of manipulation and debasement. Despite its youth in the digital world it inhabits, its core DNA shares a remarkable resemblance to the precious metal that has captivated humanity since the dawn of civilization. It's a testament to the idea that the principles of sound money scarcity and sovereignty are timeless, capable of transcending physical form and finding new life in the digital frontier. The heart of this comparison, the very soul of Bitcoin's claim to the digital gold throne, lies in its adherence to the sacred characteristics of a safe haven asset, a role that gold has played flawlessly for centuries. These are not just features, they are promises. The first and most crucial promise is that of scarcity, a concept so powerful it has driven empires and defined economies. Gold is precious because it is rare. Its supply is limited to what can be painstakingly mined from the earth. Humanity has toiled for centuries, digging deeper and deeper, yet the total amount of gold is finite. Bitcoin was brilliantly engineered to mirror this natural limitation. Its code dictates a hard, unbreakable cap of 21 million coins. Not one more can ever be created. This isn't a policy or a promise from a company. It is mathematical certainty, enforced by a global decentralized network. In a world where central banks can conjure trillions of dollars out of thin air with a few keystrokes, diluting the value of the money in your pocket, Bitcoin stands as a defiant monument to absolute scarcity. It cannot be inflated, it cannot be printed into oblivion, and it cannot be devalued by the whims of a powerful few. This unprintable nature is the first pillar of its identity as digital gold, a digital representation of the unyielding laws of supply and demand. The second foundational pillar is the dream of non-correlation, the aspiration to be a financial ship capable of sailing calmly through the tempests that so often rock traditional markets. A primary reason investors flock to gold during times of crisis is its tendency to move independently of stocks and bonds. When fear grips the markets and equities plummet, gold often shines brightest, acting as a stabilizing force in a portfolio. Bitcoin was born from a desire to fulfill this same role in the digital age. In theory, its value should be disconnected from the day-to-day drama of corporate earnings, geopolitical tensions, or central bank policy announcements. It was designed to be an asset that marches to the beat of its own drum, governed only by its own network dynamics and the collective belief of its holders. The vision is for Bitcoin to be a true hedge, a safe harbor where investors can shelter their wealth from the storms of economic instability and the slow, insidious erosion of monetary inflation. This quest for independence is a difficult one, a journey of proving its mettle not just in theory but in the chaotic reality of global markets. It's an ongoing battle to decouple from the old systems and establish itself as a truly sovereign store of value. a digital rock in a sea of volatility. Of course, the debate rages on about its intrinsic value, a concept that often separates believers from skeptics. Gold's value is tangible. You can feel its weight, admire its luster, and craft it into beautiful jewelry or use it in high-tech electronics. It has a physical reality that has grounded its value for thousands of years. Bitcoin, on the other hand, exists only as data on a distributed ledger. It has no physical form, no industrial use in the traditional sense. Critics argue that this lack of tangibility means it has no real value. However, a new school of thought is emerging, one that challenges this old-world definition. Proponents of digital gold argue that in an increasingly digital world, the need for a physical holding is becoming less important. What is the value of a social media network or a search engine? It's not in their physical servers, but in the power and utility of their networks. Similarly, Bitcoin's value is derived from the trust and consensus of its vast global community and the revolutionary security of its decentralized network. The network itself, a globally distributed, unhackable, and censorship-resistant ledgers, the intrinsic value. The willingness of millions of people to accept it as a store of wealth, to trust its code over the promises of governments, is what gives it substance. It represents a monumental shift in what we perceive as valuable, from tangible atoms to immutable bits, a new kind of worth for a new kind of world. Where Bitcoin truly begins to outshine its ancient predecessor, however, is in the practicalities of the modern age, liquidity and portability. This is where the digital nature of Bitcoin transforms from a perceived weakness into an undeniable, game-changing strength. Imagine trying to move $1 million worth of gold bullion. It requires armored trucks, secure vaults, extensive paperwork, and a complex process of authentication to verify its purity and weight. It is slow, cumbersome, and expensive. Imagine moving that same value in Bitcoin. It can be done in minutes, sent from a smartphone in one country to a recipient on the other side of the planet, with no intermediaries, no banks, and no borders to stand in the way. The value density of Bitcoin is staggering. Billions of dollars can be stored on a tiny hardware device the size of a USB stick and carried in a pocket. This unparalleled portability and ease of transfer make it a superior asset for a globalized, fast-paced world. While gold is a magnificent anchor, it is a heavy one. Bitcoin offers the same promise of scarcity and sovereignty, but with the weightlessness and speed of light, a truly 21st century solution to the age-old problem of preserving and transferring wealth across time and space. However, the journey to becoming true digital gold is far from over, and it would be a disservice to this story to ignore the trials that still lie ahead. The path has been, and continues to be, fraught with volatility and uncertainty. In recent times, a challenging reality has emerged from market data. Contrary to the ideal of non-correlation, Bitcoin's price movements have shown an increasing tendency to move in lockstep with high-growth technology stocks in the broader stock market, like the S&P 500. During periods of market-wide panic, instead of acting as a safe haven, Bitcoin has often sold off alongside other risk-on assets. This has led many seasoned analysts to argue that, for now, it is behaving more like a speculative risk asset than a stable store of value. It is a sign that Bitcoin is still in its adolescence, still finding its identity in the vast landscape of global finance. It is being tested, its resilience and independence pushed to the limit with every market cycle. This is the great challenge it must overcome. It must endure these storms, proving that its correlation to traditional markets is a temporary phase of its youth, not a permanent feature of its character. The journey is about graduating from a speculative instrument to a trusted global reserve asset. It is a trial by fire, and only by surviving can it truly earn the title it so boldly claims. This is the difficulty, the struggle at the heart of its story, and overcoming it will be its ultimate triumph.